Ladies and gentlemen, welcome back to the Crypto News Weekly Roundup. We are back. We're buzzing. So happy to have you back, Rachel. You left me solo dolo this week. I know you were on vacay. I shouldn't really say you left me, but you left me. It sucks being alone. I was lonely, but we're back. How are you? How was vacay?
Yeah, doing well. Vacation was great. I was in New York last week taking it easy, and this week I am back in the Bay Area and ready to talk about the crypto news.
I love it. Let's jump into it, folks. Last week, while I was alone, we were praying for some green on the board, and boy, did we get it. Bitcoin is up 10 ticks to 120.9 per BTC. Ethereum is up 14% to 4.5K. XRP up 10 ticks to 3.07. BNB up 10% to 1,070. Sol up 16% to 230. And Hyperliquid, biggest gainer of the week, up almost 19%, back above $50 per hype. Literally green across the board on the 1 hour chart, the 24-hour chart, and the 7-day chart. We absolutely love to see it. Rachel, this week, the theme of the week was policy and regulation, which we will save for the second half of the show. But to kick things off, Swift, which is the financial messaging provider that literally runs the whole world of finance, has announced that they are building prototypes and they are going on chain.
Yeah, Matt, this is great news to kick us off. So Swift, the financial messaging provider, today announced that it's working with Consensys and a consortium of global banks to add a blockchain-based shared ledger to its technology stack. In a press release, Swift said that unlike its traditional role as a communications network, this move into a shared ledger will allow it to record, sequence, and validate financial transactions directly, creating a backbone for tokenized value exchange between institutions. Work is currently underway with more than 30 financial institutions worldwide, representing 16 countries. The consortium includes global banks, including names such as JP Morgan, Bank of America, Deutsche Bank, HSBC, BNP Paribas, Standard Chartered, Citi, and many more. So this is really exciting news. Can't wait to see what happens here.
Super cool. Also, funny story. I saw this on Twitter today, guys. They first proposed this in 2015. Swift could have done this in 2015, 10 years later, and they're doing it. I mean, 10 years later is better than never, but that's just classic big TradFi count into crypto, and we love to see it. Biggest news this week on the new coin front, XPL, which is Plasma, a new blockchain built for lightning fast stablecoin transfers, is exploding in popularity, fueling bullish Plasma price predictions. People are predicting wild stuff for Plasma. It launched on mainnet and hit pretty much every major exchange, and it surged to $1.68, a jaw-dropping 3,260% return for those who entered at the presale price of 5 cents. And the hike was further amplified by its viral airdrop. Users who deposited as little as $1, yes, that is $1 at the presale, received 9,000 tokens at its peak. That was 15K of free money airdrop into your account, only in crypto. Wild stuff. Speaking of wild stuff, Hyperliquid's Hypurr NFTs hit a $76,000 floor price, but a hacker did steal some, which is not good. But the better part is NFTs might be back. Who knows? We'll see. Rachel, kick it off.
Yeah, but I feel like NFTs might always be back. But this news is focused around Hyperliquid's Hypurr NFTs, which hit a 76K floor price as hackers steal 8 pieces worth 400K through wallet compromises. A threat actor stole 8 Hypurr NFTs worth approximately $400,000 within hours of the collection's launch by compromising wallets that received the airdrop tokens on Hyperliquid's Hypurr EVM layer. Blockchain investigator Zach XBT first reported the theft targeting early Genesis event participants who had opted to receive the free digital collectibles. The Hypurr Foundation distributed 4,600 unique cat-themed NFTs on September 28th to reward early supporters from the November 2024 Genesis event.
Binance in the news again, guys. Just wild stuff. Binance last week, there was a bit of on-chain crime with Aster. This week, Binance has announced the launch of CAAS, Crypto as a Service, a white label infra solution designed to help regulated financial institutions and brokerages integrate crypto for their trading clients. The pilot program will open on September 30th, and broader availability is expected to come later this year. The platform provides institutions with back-end trading, custody, settlement, and compliance tools while giving them full control of their front-end systems, brand, and client relations. This is literally a classic infra play. Binance does have some of the best infra in the space, and people are saying they're doing this before Hyperliquid does this as well with HIP3. A classic move from Binance, and I'm sure this will be successful as they still have the biggest and baddest exchange and distribution in all of crypto. Moving forward, some DAT news in the space. The first DAT company to, I believe, hold a bunch under their treasury, and they're doing it in big style, Rachel. Mega Matrix. Never even heard of them before, but they're making moves.
Yeah, Matt. So, New York Stock Exchange listed firm Mega Matrix announced on Wednesday that it expanded its $2 billion digital asset treasury to include a wider set of stablecoins and governance tokens, making it one of the first U.S. listed firms to adopt a multi-asset stablecoin framework under SEC compliant structures. In a press release shared with Crypto News, the company said it was previously concentrated on Athena's governance token ENA. Under the revised strategy, it will also hold USDE, USDTB, and ENA from the Athena ecosystem, USDH and Hype from Hyperliquid, USDF and Aster from Aster, and USDS and Sky from Sky Protocol. Wow, that is a tongue twister.
Bunch of tokens. The Treasury Department is back in the news this week. This may have been the biggest piece of news, second biggest piece of news this week, but the Treasury Department is preparing to formally exempt crypto holdings from the Corporate Alternative Minimum Tax, also known as CAMT, which would eliminate a potential multi-billion-dollar tax liability for companies like MicroStrategy, now Strategy, that hold substantial Bitcoin reserves. The move addresses the 15% minimum tax on large corporations' financial statement income that would normally have forced companies to pay taxes on unrealized digital asset gains, which doesn't make a whole lot of sense because they haven't actually triggered the sale yet. And this is under accounting rules requiring mark-to-market valuations. Strategy currently holds over $74 billion worth of Bitcoin with unrealized gains over $27 billion, facing a potential federal tax liabilities estimated in the billions, and this would now be gonzo, and they would not have to pay these taxes. Pretty wild stuff here. I sort of love to see this. I don't know the broader and larger implications, so I don't know if this is a bad thing in any capacity, but on the surface level, this sounds good and we'd love to see it. Speaking of policy, Rachel, you are an American and we save this one for you. I still don't really get how this happens. I feel like this comes to the news every year in the States. In Canada, we never get this. We have our own problems. But you guys are now facing a government shutdown. I still don't really know what that means. It seems like nothing really changes. Maybe it does. I don't know. But this one's for you. Tell us a little bit about it.
Yeah, Matt. So honestly, I don't really know what this means either, but the U.S. government shut down for the first time in 6 years at midnight on Wednesday of this week after Congress failed to pass a funding bill. This leaves agencies without money as the new fiscal year begins and threatens wide disruption from air travel to public parks. About 800,000 workers, nearly 40% of the federal workforce, are expected to go without pay. The shutdown does not directly impact cryptocurrencies, but delays and uncertainty could trigger volatility. That is craziness. Wonder how that's going to actually impact the crypto market.
Again, crazy stuff. I don't understand how 800,000 workers, nearly 40% of the federal workforce, are expected to go without pay. I think everything's still going to work as planned. So I don't know, out of my control, out of my pay grade. Moving forward, more regulatory stuff. The SEC, and this is great news, is reportedly developing a plan to allow stocks to trade like crypto on the blockchain, treating shares of companies like Apple, Tesla, and Nvidia as digital tokens similar to how crypto companies operate. This initiative has gained support from crypto exchanges and fintech platforms. It has faced some pushback from TradFi institutions that profit from the existing market structure, of course. And according to a report by The Information, the SEC is already consulting with market participants on regulatory changes that would make these tokenized securities possible. Things we love to see. 101. This is awesome. There's no reason why the stock market closes besides letting the rich guys on Wall Street go to the Hamptons on the weekend. So now they're going to have to work 24/7 like us, Rachel. Moving forward, the Texas Stock Exchange has received SEC approval. Pretty wild stuff here.
Yeah, Matt. So this is great news, especially for me as a Texan. So TXSE Group announced on September 30th that the U.S. SEC has formally approved the Texas Stock Exchange's Form 1 registration to operate as a national securities exchange, which was a milestone decision that restores competition in America's public markets. XSE is the first fully integrated national securities exchange to receive SEC approval in decades. And interestingly enough that I read in the Texas Blockchain Council newsletter this week, Dallas is now the second leader in financial jobs aside from New York. So very interesting stuff.
Wow. Crazy. Would have thought it was like Miami or San Fran, but very cool stuff there. Also never been to Dallas. Got to go down and see a Cowboys game. Last piece of news this week. BBVA, Spain's second largest bank with more than $900 billion in assets under management and nearly 70 million clients worldwide, wowza, has announced officially that customers can sell, buy, and hodl Bitcoin and Ether directly via its mobile app. The new offering is fully integrated into the same rails that BBVA already uses for the foreign exchange platform, providing users with a familiar environment for trading. They will also allow customer holdings to use its in-house cryptographic key storage platform rather than rely on external providers. This is only going to go out to certain folks to start, but this is great, and we need more big banks giving crypto access to their best customers. Rachel, great to have you back this week. I missed you last week. And guys, we hope you enjoyed this one. I asked for green, and we got some green this week. Rachel and I are asking for more green on the board. Last Q4, when Rachel and I were doing this, I remember the Parabolic run up. Bitcoin, I think, went from 60 or 70 all the way to 100. Sol went from like 100 to, or like 120 to 270. And we might get that again. So last Q4 was good vibes. Let's hope for some more good vibes. Guys, if you like this one, hammer the like button, hammer the subscribe button. We love doing this with you. We love you guys, and we'll see you on the next one. Thanks for tuning in, as always.
Thanks, Matt. Bye, everyone. See you next time. Thanks.
See you guys. Ciao.